year-end tax planning today, Mark?
Well, a lot of year-end tax planning.
Yes. So tell us what we need to know, Mark.
Okay, well, the good news is, as I believe you mentioned, we are still in December, so we can actually make some tax planning adjustments, shall we say, for 2011. My suggestion is that you have your tax professional do this, but if you're going to do tax planning, this is how you would start, and at least this is the analysis you should utilize. You have 2010, you know what those numbers are. You should prepare a tax return for 2011 as if you know all the numbers. Then, what you have to think about is what 2012 is going to look like. Obviously, you're not going to have a good idea, but will it be higher or will it be lower? Because as a result of the quote-unquote super committee coming up with nothing, we now know that the rates for 2012 will be the same as the rates for 2011.
I wonder how long it took them to get that decision.
And how much money we spent doing that.
Right.
Can we call it the not-so-super committee?
Not so super committee, which we'll get into in a little while. But what you want to do here is to determine, for instance, whether or not you're in the alternative minimum tax, for instance, in 2011 and not in 2012. That's the starting point. So, for instance, there are deductions such as state and local taxes, medical expenses, which are not allowed for alternative minimum tax, but are allowed for regular tax. So it may be that you would want to accelerate those expenses into the year where you are a regular taxpayer, not an alternative minimum taxpayer. Okay, that's why I think, and you can do that now, you can prepay, for instance, your state and local taxes.
Really?
Yeah, and get a deduction for it. And by the way, a lot of assessments are coming out on real estate right now, and you may have a problem with those assessments because they're too high. This is the time to look at those assessments on your commercial and residential real estate, determine if they are too high, and if they are, you should file an abatement with the appropriate governmental, the town or city in which you live. This is the time to do that now, okay? Another area to look at is whether or not you have any capital gains this year. Because if you have capital gains, I certainly don't, but maybe you do, Rick, because you're a much better investor than I do.
No.
What you can do is if you have losses that you have not recognized, this is the time to sell those losses, and you can in effect harvest those losses and utilize them against your capital gain, reducing your income. But you got to do it again. Now, okay? I can't emphasize that enough. You got to do it now.
No, we've got till the 31st, right?
Well,
That's a little late for planning.
that's a little late, and I believe that's on a weekend, so that's a problem. I mean, no, we've already looked at that. Also, just from a business perspective, for this year, any machinery and equipment that you buy that's new, you can immediately expense.
So that's something you can...
That goes away 12/31/2011, okay? Next year you get 50%. Now 50% write-off is still better than zero, but 100% is better than 50%. And again, if you buy something at the end of the year, you place it in service, you can write that off, reduce your taxable income. It's a wonderful thing, okay? So you really should be looking hard at that. Even if you're on the cash basis, a lot of companies, professional service corporations, for instance, are on the cash basis, okay? You can use a credit card and get a deduction for it, even though you don't actually pay for the machinery or equipment.
How does that work, Mike?
Well, you're considered to have paid it.
Okay.
Okay? If you have not completely funded your retirement plan, or you have not set up a retirement plan, set up a retirement plan now. If you haven't fully fund it now, whether it's a regular, for instance, 401k, or whether it's a Roth 401k.
Can't you fund it? Don't you have to fund it by April, or do you have to fund it now?
You should be funding it now because there's a match, okay? You really, this is on the compensation piece. You really should be doing it now, Jeffrey.
Okay.
And Mark, how much can you put away under these plans?
You can
For
put
an
away,
individual?
Depends, doesn't
right,
it?
depends how old you are.
I'm like 100, so I was just kidding. I mean, it's,
It's $6,000 if you're over 50, and I believe it's 16.5 if you're on regularly 16.5.
and that the husband and both spouses can take that?
Both spouses can take that. That's a very interesting point. So for instance, if you owned a company, Jeffrey, and your wife was on the payroll, you were considered two taxpayers, so both of you could max fund your retirement plan. Okay?
Right.
There's not going to be one limitation. The law used to be there was one limitation overall for husband and wife, but that has changed in recent years. Okay? You then have the question about, you asked this question, whether or not you should do a regular
Right.
deductible or a Roth, and that's a question really which comes down to this, which I don't have the answer to. Do you think rates are going to go up or go down in the future? So my gut is they're probably going to go up. So for most people, I would suggest doing the Roth and foregoing the current deduction. But there's no right or wrong answer to that. That's just my
Right.
opinion, and I'm wrong as many times as I'm right when it comes to predicting the future.
So there's a lot of things that are available right now that you should be thinking about, Mark, is what you're saying.
There are a lot of things, but this is the time to do the planning now.